What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. In this video, we're going to talk about letters from the IRS. You could be owed $1,400. That's right. And the new income tax brackets for 2023, which could mean you're saving significant amounts of money. That's right as well. So if you're new to our YouTube channel or you haven't subscribed yet, make sure to click the subscribe button down below. It's completely free to do so. Click the bell icon after you subscribe. This way you won't miss out on new videos that come out here on our YouTube channel. Part of my mission is to keep you guys updated on everything going on here in our country on a daily basis, as well as all these different type of stimulus programs. There's all sorts of programs that people don't know about. There's 33 different states actually sending out state stimulus checks, inflation relief checks, tax rebate checks, property tax rebate checks. Some you might need to apply for, some a lot of people don't even know about. The student loan forgiveness program that is going on right now, that's having some legal challenges, but so far it looks like it's going to be going through. Rent assistance, mortgage assistance, utility assistance. A lot of these programs people don't know about, and everything going on here on a daily basis. So I'll keep you up to date here. Also, the new income tax brackets for 2023 just got announced, and they're raised. So people are going to be paying less taxes in some circumstances, even if you don't pay any taxes. The bracket's higher for people who don't pay any taxes, so you can make more money if you're on like Social Security or things like that. You can make more money and still be in the lower or zero tax bracket per se for the standard deduction. Here's the details on this. Yeah, amid soaring inflation, the IRS announced this week that higher federal income tax brackets and the standard deduction for 2023 are higher. That's what most people take on their taxes, or even if you don't claim taxes, which is basically the reason you wouldn't file taxes because you don't need to. Okay. The agency boosted the income thresholds for each tax bracket, applying for 2023 and for returns filed in 2024. These brackets show how much you'll owe for federal income taxes on each portion of your, quote, taxable income, calculated by subtracting the greater of the standard or itemized deductions, if you itemize, of your gross income. The new marginal tax brackets are, I'll come out of the screen here so you can see this. This is for married filing jointly here for 2023. So for under $22,000, it's 10% or less. Or I'm sorry, 10% of your taxable income. But remember that you'll get a standard deduction here. So I'll show you that here in a second. So that's the 10% taxable income bracket. Okay. From $22,000 to $89,000, that bracket is taxed at 12%. Okay. So the way this works here is that if you say you make $23,000, everything up to $22,000 will be taxed at $10,000, and then you basically fill up this tax bracket. And then once you get into the next tax bracket, this amount from $22,001 up to $89,450, this is for married couples, gets taxed at the higher bracket. Okay, you don't just pay everything, doesn't get taxed at the higher bracket. Okay, you have to fill up each bucket, is the way it kind of works here. It's a common misconception if you understand what I'm saying there. Basically, if you go $1 into the higher tax bracket, you don't pay the full higher amount of 12% on your whole income. You pay 10% on this whole amount, then you pay 12% on this whole amount if you fall into that tax bracket per se. So that's for married filing jointly. Here's the tax bracket for single individuals, okay? tax bracket for single individuals. So it's been raised to 11,000 for the 10% tax bracket, and for the 12% tax bracket goes from 11,001 to 44,700. And for the 22% tax bracket goes from 44,700 to 95,300, and then from there on up. Higher standard deduction. This is basically the write-off that everybody gets here. The higher standard deduction will also increase in 2023 to 27,700 for married couples filing jointly, up from 25,900. Single filers may claim 13,850, an increase from 12,950. This is why a lot of people don't have to file taxes, because the standard deduction basically wipes off that amount of income and basically means you don't owe any taxes for simplicity's sake here. Okay, so this is the standard deduction, which for the most part kind of gives you a write-off of that amount and means you don't have to pay taxes. This is the case for Social Security as well. Remember that Social Security is actually taxable, but if you make less than these amounts, you don't have to pay taxes. Okay, but if you make more than this in Social Security, or if you have this plus other income and other amounts, then you would have to pay taxes. Also remember that Social Security is taxable in some states. As you can see here, 12 states actually levy a tax on Social Security benefits. Did you know this? Yeah, the states are, so first, to clear this up, while it's possible to pay no taxes on Social Security benefits, retirees have to remain below the minimum income threshold, which is kind of what I just explained with the standard deduction. Minnesota and Utah are the only states that levy an additional Social Security tax that uses the same income threshold for taxing as the federal government. God bless Minnesota and Utah for taxing their seniors additionally. Yeah. 12 states tax some or all of their residents on Social Security benefits. They are Colorado, Connecticut, Kansas, Minnesota, Missouri, Montana, Nebraska, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. Yeah, not that fun for those particular states. So you can let me know your thoughts here on that. Are these states just greedy? Will they change this? With all these state surpluses, these states now have billions and billions of dollars of extra money from the state surpluses and also from the stimulus money. Will they be changing this? It's this possibilities. In fact, we've seen a lot of states reducing their tax brackets and reducing taxes like this. So this is something that could happen. Yes, that letter from the IRS is real. You could be owed $1,400. This is from the Washington Post here. 9 million households could be due significant money, and for multiple different reasons, including the expanded child tax credits and the earned income tax credit payments, as well as past due stimulus checks. So you might be getting a letter from the IRS in the mail. In fact, let me know if you got one in the mail. They're going out now, so I don't know if anybody got them yet. But here's the details on this. With rent, food prices, and utility bills up, many families could use some extra cash. Inflation is stressing people's budgets big time. If you're struggling and you didn't file tax returns this year, check your mail. Last week, the IRS started sending letters in the mail to 9 million households who may still be eligible for several lucrative tax benefits, including the third round of stimulus payments worth as much as $1,400 for an individual and $2,800 for couples. Yeah. If you didn't get the full amount of the pandemic-related economic impact payments, aka the third stimulus check, yeah, there's a couple official names like pandemic-related economic impact payment. It's also known as a tax rebate check as well, and you're going to see why, because you at this point are going to need to file a tax return. Okay. Under the $1.9 trillion American Rescue Plan. So remember that third stimulus check package alone was $1.9 trillion. You may be able to claim this credit, but you must submit a 2021 tax return, even if you don't usually file taxes. Okay? Even if you don't usually file taxes. But if you're owed that third stimulus check, if you didn't get it, $1,400 to $2,800, you're probably going to want to do this. The payments were the largest of those sent out to Americans under the stimulus checks starting in 2020. You don't have to have income, any income for 2021 to qualify for those stimulus checks, but there are income caps of, I think it was $75,000 to $80,000. The IRS faced a daunting task to reach millions of people who don't typically file tax returns. And they had the IRS non-filer tool, and probably a lot of people didn't fill them out, didn't know about it. You know, and there's also checks that could have been lost in the mail, or checks that people might have moved and their check got lost. So there's probably a lot of people that didn't get their checks. Technically, the stimulus payments were an advanced credit referred to on Forms 1040 and 1040 SR as the recovery rebate credit of a tax return, even if you don't file taxes. Okay, this is where I try to explain this to everybody, but not everybody gets it or listens all the way through, or didn't catch that video of mine or something like that, right? For the third round of payments, eligible individuals with an adjusted gross income of $75,000 or less were entitled to the full $1,400 check. So as long as you made less than $75,000 per person, you're entitled to the check. It was actually $112,500 for a single filer head of household as a tax filer, and $150 for married couple because that's $75 per person. You could also get $1,400 for each dependent you have as well. Yeah, so there could be a lot of money you would be missing out here. Okay. In addition to that, you could also be eligible for the child tax credits. The child tax credits of $3,000 to $3,600. Okay. Also, I want to mention here that even if you got those monthly child tax credits, those $250 to $300 per month, if you didn't file a tax return, you're still missing out on a lot of money, because the other half of the money, remember those monthly payments didn't start until July through December. So the other half of the money, the January through June, you're still owed. You have to file a tax return to get that for 2021. That's last year. You file that tax return this year. Okay. Even if you're not required to file a tax return, you want to file a tax return to get this money. The IRS will literally just cut you a check because you filed and said, hey, you owe me this money, send me my check. Okay? Yeah. So remember that last year for 2021, you filed a tax return this year in 2022. Even though it's late, it's not even late unless you owe the IRS money. And if you're getting child tax credits and stuff, chances are that you might not even owe them money. So there's no late penalties if they owe you money. Keep that in mind. Yeah, so if they owe you $1,500 to $1,800 per child, they're going to send you a check. If they owe you a stimulus check, they're going to send you a check. So again, you might want to walk into an H&R Block, or you can actually go to IRS Free File. You can go to Google and just type in IRS Free File. You can do that. because the IRS has free file websites where you can just do this for free. Don't click on any ads. Just go right to the IRS website and do this for free. And you can claim this. Okay, so the other thing, yeah, so the child tax credits, that's for like 60 million children. The stimulus checks, 9 million people are still owed that. So there's a lot of money missing here that people won't have claimed. For the child tax credits coming up for this year in 2022 that you're going to file in 2023, they're still trying to do a deal where they're going to have a deal between the Republicans and Democrats. Monthly checks won't happen because the year's basically over for the whole monthly thing. But it's either going to be 2,000 or maybe 3,000 or higher. Either way, you're going to have to file tax return to get the money. Just like last year, you had to file tax return to get the other half of the money anyways. Okay. The moral of the story for a lot of this stuff is you got to file tax return to get some of this money at least. So keep that in mind. Even if you're not required to, you might want to file. Again, it's not tax advice because I don't know your specific situation and stuff. So keep that in mind. But at least in the case of the child tax credits or missing stimulus checks, the IRS says you have to file a tax return to claim the money, or else the IRS isn't going to send it to you. So keep that in mind. And for the next child tax credit, even if they don't pass it this year, it's going to go back down to $2,000 a child. You just have to file a tax return for it. For those without children, for adults without children, okay? I always get people saying, what about us without children? The American Rescue Plan nearly tripled the Earned Income Tax Credit, also known as the Adult Tax Credit, for low-income earners. From $543 to $1,502. The credit can be as much as $3,600, $3,618. Wow. So if you have no children, it can be up to $3,600. If you actually have a child, it can be as much as $6,000. The credit was increased to $3,600 for children. Well, this is the child tax credit. But anyways, they have another credit called the Earned Income Tax Credit, known as the Adult Tax Credit for low-income earners. Can be anywhere from $1,500 to $3,600, even if you have no children and you're a low-income adult. So keep that in mind as well, something you might want to look into. Also, the IRS specifically earned grandparents and foster parents who are caring for siblings and others to check to see if they're eligible for the child tax credits, because grandparents might be able to claim the child tax credits as well. So these IRS letters will be arriving in mailboxes this month to people who appear to qualify for these credits but didn't file a 2021 tax return. So these letters are real. The Treasury Department Tax Analysis Department identified individuals who typically are not required to file a tax return because they appear to have very low income based on W-2s, 1099s, and other third-party statements, according to the IRS. This mailing was designed to reach people who didn't file and mostly have modest incomes. To help these people to file their returns to claim the credit or money. Tax credit equals money, guys. The IRS agency says their free file program at the IRS.gov will remain open for an extra month until November 17th at midnight. So you can just go to IRS.gov and maybe just type in the search bar free file, IRS.gov. People whose incomes are $73,000 or less can use free file at the IRS using brand name software. So yeah, part of my mission on this channel is to help as many people as possible. And that's what I'm doing here on a daily basis. So let me know your thoughts here in the comments, and I'll link you to some other videos you can watch next. Make sure to subscribe down below and click the bell icon if you haven't yet. It's completely free to do so. And don't forget to like this video. You can click here to watch my video on checks that are going out to millions of Americans this month that you might not even know about. And here is my video about Social Security raises of up to $2,400 in addition to the cost of living adjustment. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.